So here we are in our financial model, the financial statements. As you can see, we've done a lot of work up to our discounting cash flow analysis, where we brought in the free cash flow to the fund, and now we are ready to estimate the weighted average cost of capital that we will use to discount those future cash flows heavily back into the transaction closing date to estimate the value of Amazon based on that primary valuation measure. In this case is our DCF analysis. So as you can see, we have everything set up from here. We were able to build this model for 3 statement financials, and now we want to construct our discounted cash flow analysis as a primary measure of the value of this company. So we're going to be determining the value of Amazon based on the primary valuation method which we mentioned earlier. So in this case, it's our DCF analysis. We also have precedent transactions where we're going to do later on. We also have some of the part analysis, which is going to be based on the breakdown of revenue from Amazon's different business segments. As you can see, we have the online store and physical stores, which fall under the first party business segment. We have the retail third-party seller services, which falls under the third-party business segment. We also have here the retail subscription services, which fall under the subscription business segment. We also have the Amazon Web Services, which is cloud computing, which falls under the cloud business segment. And we also have Author here, which is advertising. It falls under the advertising business segment. So as you can see, we have all of these business segments here, which allows for the breakdown of revenue. So the total net sales is going to be used later on to determine the sum of the part analysis for each of these business segments, and any of those companies that are classified under each of these business segments. We would take the EV to revenue, that is the EV to revenue, that is the trading metrics. So we'll take the multiple, I will multiply that each by the revenue generated by Amazon for a particular year in each of these business segments. That's the sum of the part analysis. And we also have the precedent transactions, which occurs from past M&A activity. So we're going to be taking activities from past mergers and acquisitions that took place. So we will gather the financial estimates, and we'll also gather the current capitalization, and we will use that all together to determine trading multiples based on that. So it's similar to comparable company analysis, which we did a while ago. So from precedent transactions, we will come up with our low, medium, and high trading multiples. So in this case, we'll be taking the EV to EBITDA multiple as our trading multiple to best estimate the value of Amazon based on the trading multiple. So essentially, we will choose again a particular year, and then we will extract the EBITDA, the earnings before interest and taxes, depreciation, amortization for Amazon for that particular year, and then we'll multiply it by that multiple for the low, medium, and high from our precedent transactions trading metrics determination. So that's how we will estimate these 3 primary valuation measures for Amazon. And then we also have secondary valuation measures, which we mentioned already. We have the equity research consensus. So we will take equity research consensus prices, and then we will later on also take Amazon's current market prices, that is 52 weeks trading prices, and then we will use that as our secondary valuation metrics to estimate the value of Amazon based on that. So we will come up with the average based on our primary valuation metrics, and then we will estimate whatever Amazon's current price is and see what investment recommendation we can give to investors who are ready to hold long-term investments in Amazon stocks. So example, we are modeling from 2021 up to the year 2031. So a decade from that year. So essentially what we are saying here is that companies that are, or investors that are interested in high growth stocks who are willing to hold the stocks for over 10 years, then they will see if it's actually a sell strategy, a buy strategy, a hold strategy. So whatever recommendation we're gonna be bringing out of this is gonna be a recommendation for whether it is a buy, sell, or hold strategy. So we are just estimating that. And again, this model is not to this model. It's applying exactly informations or data that we got from Capital IQ, that is 12 months past 5 years financial informations we got from Capital IQ, and also we also got information from Amazon's public filings, that is its 10K. However, this model